Welcome, ladies and gentlemen, to this episode of Partner First. As always, we're going to be discussing thought leadership, notable items in notable products and services and topics going on in the MSP space and telco. And today is absolutely no different. We all know that VoIP is a scary word for many MSPs, even though it really shouldn't be. It's a source of recurring, sticky revenue. VoIP revenue actually stays longer than MSP revenue, for those that don't know. So it's very nice to have, and something every MSP should have in their toolkit. I see already we got Landstar Telecom joining us in from the chat. Whether you're on LinkedIn, Facebook, YouTube, make sure you enjoy the chat. Hey, Dallin, how you doing, man? Make sure you sit there and chat with us. This is going to be interactive. It's not going to be a slide and slay. We are going to be taking the chat comments. And as always, these are recorded, available immediately after on LinkedIn, YouTube, and Facebook. Hey, what's up, Aaron? Who's going to be one of the hosts on a couple shows coming up on MMN. So we'll see. We'll talk about that later on. But today I'm joined by two heavy hitters in the space. These are people that have been around the block a while. We have Samantha Maquei, who is the finding director over at CLA, and we have Matt LaHood, who, besides the person that I bug at least 3 or 4 times a week, is the managing principal of industry at telecom over at CLA. How are you both doing today?
Great. How are you doing?
Doing great, Ray. Thanks. Thanks for having us.
Absolutely. So finding director, Samantha, why don't you give us a quick background, what your role at CLA is and a little bit of your history?
Sure. Thanks for asking. So I've been in the tax arena for about 23 years, specifically in telecommunications since 2006, and have been working with all of our CLA clients for about the past 8 years. So just love working with telecom providers. I love the intricacies of the complexities of telecom tax.
Awesome. And Matt, I think there was Let There Be Light, then Let There Be Voice, and then there was Matt. So can you
And I tend the garden. Yes.
There you go. What about you? What's your role and your background?
I dropped for a second. Yeah.
Yeah, no worries. What's your role and background?
Right. So I'm an original founder of this practice prior to being with CLA. I started a practice with a partner, Joe Solana, here in Atlanta, and we built one of the most comprehensive practices in telecommunications outsourcing for compliance and regulatory consulting. It has grown to something very substantial, and I'm so thankful that Samantha said she loves the intricacies. Well, Samantha and I work out all the complex challenges in telecommunications. And I, as the managing principal for industry, focus on not just what's going on today, but at the event horizon of telecommunications, something that, Ray, I know you focus on immensely. And that's why we talk so often, because we're always sharing notes on what's going on and how it's going to help you and your reselling partners and agents make more money, make more profit, and serve more customers.
Absolutely. And just for transparency's sake, on Partner First, we don't always have vendors that I use personally, but CLA, we absolutely, and to great fanfare last year, even though we'd been talking well before that. But we absolutely do use CLA internally and they're the go-to for all of our resellers and literally anybody I talk to in telecom. Happily refer you guys. So let's get into this because, I know one of the challenges, and that's why I appreciate you guys so much, because one of the challenges I have when we're talking to prospective VoIP resellers or anybody in the industry, talking to people on Reddit or anywhere else, is that they get scared. There's all this FUD around compliance and taxation and registrations and filings. And, you have to give your firstborn and you have to do something under the harvest moon, all this fun stuff. And only some of it is true. But, having the answers ahead of time makes things a lot easier. And that's what we want to address today, because I hate to say it, but some of these questions came out of, even after doing this 15 years, there were questions I was discussing with Michelle, my CFO, and Victoria, who's in charge of compliance and inside our org. And there were answers I didn't know. Like, she was educating me, and I'm like, we've been doing this a long time. So I figured if I'm learning, I figure it's best to share the knowledge with everybody. So first and foremost, let's get to that very first question. Can I do my own compliance, right? That's the question at hand. Everybody wants to know, can I do it myself? So Samantha, what say you? I mean, do they absolutely have to have a vendor?
Well, since we're talking about four-letter words, I will throw this out there. Sure, that's my four-letter word. You can do your own compliance. I will go ahead and put the disclaimer in there that you would need to know a lot of things to do that properly. And so that's where someone can come in and assist you with that if you need it.
I like that. That's like, when I sit there and I talk to my wife and I say, "Is everything okay?" And she says it's fine. And I know it's not really. Sure, you can do it yourself, Um, it's a little like your taxes and I know they kind of get lumped in together, but like you can do your own taxes. There's nothing that says you can't, right?
Yeah,
Um,
right.
but it's the question is, does it make sense? Do you have what pitfalls are you going to come into? What could happen if what don't you know? And I like to leave the subject matter experts to do their expertise, right? And that's why we have the good people at CLA. And this
You-
stuff is universal. This is not going to be a CLA pitch, right? This is just
Yeah, and
the
Ray,
most
you
knowledge.
know that we generated a do-it-yourself guide for those that want to attempt it themselves, and I spend time every week talking to your channel about how they can do it themselves, and we come to a conclusion, oftentimes right over the phone, on whether or not they have the capability of doing some or all of their own compliance, and that's our first goal: is to help people do it themselves until they can't.
Absolutely, and that's the thing, right? And that's one of the things I love. It's your education first and do the work second. And I do the same thing. That's why I don't care if you're selling our services or somebody
Right.
else's. I'm happy to educate. And it's funny because I tell everybody, and they don't believe me, but I tell everybody, go talk to Matt. He has this guide. You can do it yourself. He'll talk to you right now. Um, just but talk to him first, and they almost always end up using you guys anyway. And Landstar says it right on the head. Focus on growing your business. Let the professionals do their job of keeping you compliant. I couldn't agree with that anymore. But there are some people that choose to do their own compliance, or maybe they've been doing this for a while, and the question comes up: at what point does it make sense to hire a compliance company? Um, I'll put this open to Samantha, Matt. What do you guys think?
Yeah, so I basically looked at this from my history of dealing with my clients. It really comes down to when they can no longer manage the headache, the cost of the compliance, or more importantly, the risk. It all really, for most of the clients, it does come down to risk tolerance. There's so many risks involved in completing your own compliance efforts, whether it be reviewing, 37-page plus booklet of FCC instructions, or dealing with voluminous notices that come, those type of things. I think Landstar had already mentioned. Maybe it's something that the professionals could do a better job of.
Yeah, absolutely. And so I see being asked Alex is asking about the DIY guide. We can put it in the show notes once this is up on YouTube. Absolutely happy to. And or reach out to Matt. Matt will be
Yeah.
happy to share it with you directly.
Ray, I
Um,
literally was talking to one of your agents moving over to the white label platform, and as I was talking to them on what we could do and how they could do it themselves, the owner of the business has his wife doing the accounting and the tax, and she literally quit while we were on the phone when she heard that we could do it. So, but that's not my intention. But it was just so funny to hear. She's a full-time nurse doing his accounting work and paying the taxes, and she goes, "You have a solution. I quit."
I mean, but that's the thing, right? Like,
Yeah,
Michelle does our finance, right?
yeah,
And she has her team. I mean, she has her AP and AR people. But like, if I had to do the finance myself, I would never run this business. I
yeah,
tried that when I was an MSP. I tried doing the finance stuff myself. I was so bad at it. It was
yeah,
so miserable. I'm like, let the smarter people do that. And when it comes to risk, you know, that's a good point. And that kind of leads us into our next question, and I'll pose this to Matt. There's this how do I say this? There's this advice that goes out there that you see all the time that, the FCC or DOR doesn't care unless you're under a certain number um, per state. I know you'll talk about this, but the official question is, what revenue threshold should I be at before filing in a new state? Um,
Yeah, the law isn't built on whether you feel like filing taxes or paying those remittances. The law states that you should be licensed and registered where you do business and where the license is required, and you need to report and remit what you've collected, and it needs to be accurate. There isn't any if or ands or buts. So the common misconception, like in some states where there's a threshold on whether or not you even have to pay something you've collected. There's actually things called de minimis, and most people think, well, if I'm de minimis and I don't have to pay, that means I don't have to file, I don't have to register, and that's absolutely wrong. You do have to file and register even when you don't owe things. We are in a regulated industry, and it's simple for us to do for you. It's also possible for you to do it yourself, but always remember that if you are in a state and you are doing a federally regulated telecom service, that you have responsibilities, and it's important for you to know what those are, even if you don't owe something. So the question is more like, when is it important for me to do it from a financial standpoint? I can't give you that answer. That's a risk versus reward, because if you owe something and you don't pay it, you don't file, you don't perform, then you're building up a liability, and that liability will gather every month and accrue, and accumulate. And at some point in time, it can be a pretty substantial number. What that is for you is really up to you. That's a risk tolerance thing. Um, but needless to say, now the real question is another real question about that is, does everybody pay their taxes? And the answer is that most companies put what's called a materiality threshold on their own performance. That might be $1, might be $5 of taxes, might be $100 of revenue. Whatever that materiality is, that's a risk versus reward question, Ray. And we have the ability to monitor and manage a risk tolerance rule that people put on us. Um, but if you're doing it yourself, the great thing is that OIT's infrastructure and the billing infrastructure will tell you how much you're generating every month, and then you can extrapolate from there on your own and say, I think I can go 10 months or 3 months or a month or a week before I do something. But that's all risk tolerance, Ray.
Yeah, and that's the big deal, right? It's not a these are business decisions, and I'm sure you get this all the time. Like, I'm so tired of telling everybody, if it's 30 cents, they want you to send the 30 cents. There's no version of that where they're like, "Nah, keep the money, it's fine."
Right.
Um,
That's what the law
but
says. Yeah.
Right. But there's business decisions. When does it make sense to file in the state or whatever jurisdiction?
Yeah.
And that's why those professionals are so important. And this, again, this is not a CLA pitch. This is
Yeah.
I tell everybody exactly the same thing when they're talking to us about going white label,
Hmm.
about doing VoIP resell.
Yeah.
We have the numbers there already included. Like, count this as part of your business expenses, like
Yeah.
your credit card processing fees, like anything else, your administrative costs, your payroll costs.
Right.
Just count these, right? And
Yeah.
unfortunately, you can recoup some of the the compliance costs with
Yeah.
surcharges. You can't do that with payroll, unfortunately. I don't know.
Yeah.
Maybe Simon, I'll start charging you for payroll.
I,
We'll see what
I
happens.
will add a just a business person's rule of thumb. If you make $5 a seat in margin, contribution margin, you know, just think of it costing anywhere from $100 to $200 on average a state to be compliant, right? So you can do the math. If it's $5 a seat to be compliant, you need to sell um, 400 seats or 200 seats, depending on your margin. And so when you go into another state, just know that if you're not planning on being compliant there, because you only have 1, 2, 5 seats making 10, 15, 20 bucks a month, you'll never be profitable. So I always tell your partners, you've got to be in it to win it. If you are going to go into another state, go in to win it. If you sell one customer, go sell 10. Make sure that you have enough carrying capacity in your financial model to either do it yourself and hire somebody in-house or to hire somebody like CLA. I hope
That's
that's
something we
where.
do. That's something we address a little differently right now.
Mhm.
So we have white label partners that, you know, they build a critical mass in a single state. Usually they're local, right? They're local geo. And then they start getting, especially with work from home, remote, right? There's so much distributed business now.
Right.
Well, or a business, one of their clients will expand to another state or whatever it happens to be. We've had those where we have a white label partner that'll do, they're registered in a single state, and if they know they're going to have a client in another state where it doesn't make sense for them to file yet, they'll actually run that through our channel program, so we can do the filing remittance because we're already registered in the
Perfect.
state,
Yep.
and pay them. They get paid commissions as opposed to their white label, but this way they can continue to offer without and continue to manage. Now with the advent of MVNI, which we'll talk about at the end of this, that we're going to be launching very soon. We're in the process of that now. That'll be even better. But for right now, there's options there. But yeah, it's a business decision, and it's not really any different than, you know, when we started hiring employees in different states, right? It's a matter of can we facilitate having employees? We have to register in the state and, you know, payroll, and sometimes it's a pain with a single employee, but they're business decisions to be had. And that leads into the next question, which you already touched on a little bit. Besides the monthly cost, what does it really cost to get registered to remit those taxes? And because you have that first get started, right? Getting registered with all these entities.
Yes, and as Matt mentioned already, there are some states that you can go into as little as $100 or $200. However, there are states out there where you're going to have to put down something like $4,000 just to get into the state because of specific publication requirements and or a specific license to offer telecom services.
We just had that now with what was it? California is now requiring a VoIP license. We just had a client coming across that.
Mhm.
Um, you know, and that's the thing too. It's one of those things. Oh, I apologize, my camera's being weird. I That's one of those things where these things change pretty quickly. I've never seen any other industry where the rules change as fast as it does here, right? Whether it's, you know, TRS is getting applied to VoIP now, or whether there's a new registration or a licensure requirement. I don't know how you guys keep up with you know, with US 50 in Canada. It is nuts. But it's just nonstop. But that's the point, right? You stay with a compliance vendor or your accountant that knows how to read the IRS code. The compliance vendor is exactly the same thing. Um, so next question I have here, if I'm a reseller, and guys, if you have any, guys and gals, if you have any questions in the chat, please include them. I'm not Dallin, I'm glad you're not one of my service providers. If you're not planning on being compliant, it's free. Um, to be clear, Dallin runs his own business. He's a separate NetSapiens service provider with an
Got it.
awesome TikTok. So next question: if I'm a reseller and my provider charges me taxes, why would I need to remit taxes myself? Um, we get this fairly often too.
Yes,
Um,
this is the most prevalent question that is asked in the market, really, around resellers. And this comes from really just no other way to say it other than you're considered the carrier of record. And I know that can be a little bit confusing if you're not used to dealing with FCC terminology, but basically you're presenting the actual charges to the customer. So that is why you would need to be registered in that case.
and that makes sense, right? We're not actually supposed to be charging the reseller taxes because they're supposed to be
Right.
they're supposed to be whatchamacallit, exempt because they've been compliant themselves.
Correct.
Um, So absolutely.
Yeah.
So my next one is for Matt. You know, there's a fair amount, you want to be able to plan for your business, right? So will my tax liability be the same each month? Um,
Right. Right. So I'm a business person and I want to forecast what my tax liability is. Just just remember the question relate that I believe the question is asked because it's somewhat from the point of view that it's costing me money to pay taxes, to pay those taxes. You must understand that taxes, if done right, are only paid once and collected once from your end customer. And so the way that Ray and his team have built out the infrastructure for you to be able to bill is built out so that you can have confidence that what you collect on your bill will be more than enough to what you need to pay. And so it's really no out of pocket per se. Um, Now, how do you forecast, or how do how do you understand what you owe? It's never going to be the same, and we'll get into this probably later on with regard to FCC guidance on what you should be collecting for USF. But just know that there are 35,000 jurisdictions out there and counting for telecom. Any one of them can
Just a
change
few.
the rate. Yeah, just a few. Luckily, Ray and his infrastructure solves all that. It knows when taxes change, and any one of those changes can be introduced underneath the hood when you run your bill, and the sales tax might change a little bit because they just implemented um, a soda tax in Chicago on telecom, and they pass it into law, and it goes into effect April 1st, and now your taxes are up and nobody knows why. We can actually go into the billing system's tax rating results and show scientifically how that was calculated. But it does go up and it does go down, mostly up. But lately, USF has gone down, Ray, which is very exciting. It's been on a
Which is nice,
tear.
right?
Yeah, it's been on a
That,
tear for
yeah.
years. Nice to see it go down.
And so you said soda, you said USF. I want to get into some definitions here, right? Because telco and compliance has this, like any industry, has like 1,000 different
Mhm.
acronyms. So first and foremost, USAC. For those that don't know, Samantha, can you tell us what USAC is and how they play into compliance here?
Yeah, so USAC is the Universal Services Administrator, and they basically collect for the FCC the funds around the federal USF.
And they change quarterly, right? That's what Matt was talking about. And those changes are published. They tell us, they advise us, what, a month in advance before the quarter, it's something like that.
Yes,
What the
so
next
they
quarter
make
is
it,
going to be.
yeah, they make a notice of rule change, and it's for us tax people, specifically in telecom. It's a very much anticipated posting. We can't wait to see what that rate's going to be.
You and me both. And yeah, for a couple of years, it was just rising up and rising significantly. It wasn't even like a little change, it was nuts. So to see it go down at all is actually really nice to see. A welcome change. So USAC has there's a definition here, or a term here, de minimis. We see that thrown around a lot. Can either of you share with us what that means exactly?
Yeah, so de minimis is basically a status that's given when the amount that would have to be contributed is less than $10,000 for a year. And there's a formula that goes into how much revenue that would mean that would need to be reported on a 499 that comes out to about $38,610. So basically, if you have less than that amount accessible revenue, you would be considered de minimis, which
And
means
so,
in
yeah, go
in
ahead. I'm sorry.
really latent terms, you wouldn't have to pay them.
Right. And that's where, your carrier, or that's where we're filing and remitting on their behalf, if they're one of our partners. Um,
Yeah,
and
and just to
so,
clarify, Ray, it's not
yeah.
that you're remitting on their behalf.
Well, yeah,
And
sorry.
that, because that's what sets up a little bit of a confusion. When you are de minimis, basically you're considered similar to an IRS status called, um, under the poverty level. And we all know this. We started out working at restaurants, and when we filed our tax return, we were below the poverty level, right? And so you didn't have to pay any tax to the IRS. But so a lot of people think, oh, if I don't have to pay, I don't have to report. And if Ray's collecting it, that means he's doing it for me. And that's not the case. Just like your IRS 1040 EZ, when you were younger, you had to file it to prove that you were de minimis, right? At the poverty level.
Yeah,
And
okay, that's
yeah, I hope that's helpful. You still have to report to prove that you're de minimis. And when that happens, Ray has an obligation to collect USF for his wholesale transactions with you. because the USF has to be paid. And so he's collecting on his behalf while you are de minimis indigent.
Yeah, and that's one of those crazy quagmires. So in net reporting, and that's the question here that's up next. And it only says what is the 499A, and I'll include the Q on there too.
Mhm.
What are those, and do they have to file them?
Yes, so I can take that question. The 499 is the filing that's reporting your revenue to the FCC. And you do have to file that. And that goes back to my original statement. You're considered the carrier of record. You're actually invoicing or providing the charges to the customer. And for that reason, you do have to file the 499. Now, you may be below Matt's poverty level, as he discussed, and you may not have to pay them that money, but you do have to file it.
I kind of like calling it the poverty level. It's if they just said that, that would be so much easier than calling it
Yeah.
de minimis. You know?
I try to make it layman's terms because, not everybody deals with this every day. And so many people say, well, I'm de minimis with the FCC, so I don't have to file anything in the states. And, there are some states that have de minimis levels. There's a state that says if you've collected under $100 of a tax, you don't even have to pay it. So you get to keep it. But you have to file to prove that you were below the $100 so you can keep it. So there's performance that needs to be done. And to Samantha's point, you are required to file 499 Qs and the 499A. The 499A is what's called a true up. It's the annual report, and it takes into account all the actual rates and the actual revenue that you had, whereas the 499 Qs are just projections, they're forecasts. So it's always going to be
Nice.
different.
So I want to go back to real quick. Alex K had asked for the DIY guide. Simon got it up really quick. I appreciate it, Simon. So he'll put that in the chat as well. But
Mhm.
that's the DIY guide that's published by Matt
Mhm.
and team over at CLA. Matt gets all the credit, right, Samantha? Like he gets all the credit, but I know he has a big team doing all the work, and I know that because Victoria and Michelle tell. Well, I've worked with them too, but Victoria and Michelle tell me all the time. Um,
I'll
we're
send
gonna
them
go.
more bottles of wine. Thank you.
There you go. Keep them happy, right? I have to do the same.
Yeah.
So we have. I'm going to go off schedule real quick because I see Alan Miller in the chat. So Alan's question, going back to partner versus white label. So he's specifically asking OIT, not this is not generalized. And I'm going to qualify this: channel partner versus white label. Channel partner being our agency model, white label being the white label reseller. I'll modify this a bit. Isn't this why white channel partners and users are considered OIT customers for VoIP? Um, and yeah, we're doing the billing directly. They're our customer. And you're avoiding all the taxes. You're avoiding all that because we are the carrier of record. We're the one doing all the work. When you're white label, you register for all that, and you do that, and you engage CLA, and they do the work for you instead of CLA doing the work for us. Um, Anything you want to add there? Is Matt? Am I missing anything there?
No, just know that this is a regulated industry. So the jurisdiction, the FCC, wants to know who the carrier of record is, and so you've taken that burden on, Ray, when you're dealing with your partners, and what they're doing is they're getting the benefit of growing their business, and then you're one of the most forward-thinking white label providers because you will let them migrate over to white label, and then they can become the carrier. But in between that time, the state and the federal governments want to know who they're going to call if there's an issue, and that's Ray. He's taking all the
Yeah.
risk in that model.
Yeah. And there's another comment here, applies to whoever's billing the end user, and that's how we used to qualify channel partner versus white label. With the advent of MBNI, that gets a little bit different, and the conversation becomes carrier of record versus billing entity.
Mhm.
Do you want to? I don't want to make this all about MBNI because that's a whole nother animal. We're going to do a separate thing on, but yeah, I know we're not the only ones that are going to the MBNI space. And Matt, I know this is your baby.
Yeah.
Anything you want to talk about that briefly?
Well, just very high level. You are providing a platform that allows somebody to be an agent only, and a platform that allows somebody to be a full-fledged carrier without having to build all the infrastructure. There's one other item, one other way in the middle that we've seen prevalent. Some companies call it gray label. It's a third way. We call it a mobile and VoIP network incubator. And so what you're going to be doing is you're going to be creating some special terms in an agreement that'll allow them to essentially be fostered in growth and take on some of the responsibilities that an actual full-fledged white label reseller would have, but you still take on all the burden of paying all the taxes and fees and keep a record of that. For managed service providers, this is ideal because managed service providers oftentimes come into our space with millions of dollars of revenue in the managed service space and very little in telecom. And so what they're looking for is a way to get stickier and grow their revenue and grow the value of their company. And this takes, in a partner model where you're an agent, you don't get the value of the subscriber, but in the contract terms that you're going to provide, it'll give them a pathway towards that ownership, and it's something they can essentially grow to. And we make sure that everything's done right for the months or years that Ray is taking care of your customers, making sure all the taxes are paid. Because I have wholesale white label partners for other companies, and they immediately want to sell their business. And this gives you a chance to grow your business in the time you want to sell your business or merge with another company. You get the full value of that, so long as you convert yourself from an agent model to a full-fledged white label reseller. And so this incubator is there to help you incubate if that's what your plan is. So partners can stay as partners if they never want to be anything other than partner. But if you have a desire to go from partner to a full-fledged carrier, this is somewhat of a ladder to get you there. Was that good enough, Ray? I know.
No, that's perfect. I love that. You're far more eloquent than I could have been, so I appreciate it.
I'm a great
Um,
sales engineer, I guess, sometimes. So, but
there you
it's
go.
really exciting. It's something that we've pioneered because we want to make sure that if your partner is growing their business with you and they want to eventually become a carrier, we want them to emerge healthy. We don't want someone to emerge like, I forget who it was. Was it Landstar? Somebody said, if you don't pay your taxes, it's free, right? Well, it may be. I hope I'm
Yeah.
back. It may be, but when you go to sell your company, they're going to say, "But you owe all this money, so we're going to deduct that from the value of your company." We don't want that to happen.
Yeah, absolutely. And it goes back to that, in combination with CLA, just lowering that that barrier to entry
Barrier
to
to
become
entry.
a
Yeah.
VoIP seller. So we appreciate that. So going back to the USAC topic, USAC, I'm curious as to see what Matt comes up with this. What analogy he has. So we had poverty level for de minimis. Let's talk safe harbor. Am I homeless with safe harbor, or what's safe harbor?
Samantha, you want to take that?
I sure can, Matt. Safe harbor is a term that FCC has provided to basically state the apportionment or the percentage of revenue that's going to be accessible. And so they have different percentages based on the type of telecom service. For VoIP, that percentage is currently at 64.9. And that is allowing a carrier, if they cannot determine the actual intrastate or interstate revenue or do not have access to the call detail records, to select that safe harbor percentage.
And that's the trick, right? Like revenue, some of the some of the fees, because it's not all taxes, right? So some of the taxes and fees are calculated on percentages of certain types of revenue or certain types of qualifiers. So it's not as simple as like your sales tax where you sold $100 and it's X percentage of the $100. The compliance, the fees, the taxation, all that on this are so much more complicated. Which, and we provide sure tax, and we get all the products are tax mapped by CLA, so they're all rated appropriately and all that stuff. But it's accounted for, but it's something to consider when you get into the space. Let's see here. What do we have? Okay, so this goes back to that risk and Um, so this goes, what is it?
Yeah, so that question is specifically related to your risk tolerance, Ray, because we're basically being asked here, at what break even should I really emerge into a state? And so that's going to be something that is defined by the actual business decision, because they have, the business has to take into account what their risk tolerance is, because if they want to wait till it's, you know, $50,000, then are they potentially going to be risking notice of audit? Are they going to be dealing with the fact that in some states, if they have to get a license to provide what that state is defining as telecom service and encompassing VoIP in that, are they going to be sanctioned for not already getting licensed once they started the transactions in that state? So it really does come back to a risk tolerance decision. There is no dollar value that we can put on that.
And that's Samantha covering for my blunder. I apologize. I had a little Finding Dory moment. I got distracted. The question was, if I'm just starting out, so I don't feel I have enough VoIP business to worry about compliance, what would happen if I waited until my revenue grew significantly? Um, so thanks for that. Uh, going back to that safe harbor, which I'm calling, like I said, the sure tax, the reporting, we do our own reporting and traffic studies and all that fun stuff. But traffic study is always an interesting one, right? So, can you guys describe what a traffic study is and how it affects the rating and safe harbor and the taxation side of it?
Yeah. The government gives us several options to calculate, or if we go back to our grade school days or high school days in civics class, we learned that the federal government can only regulate interstate commerce. So in telecommunications, that's a call that originates in one state and leaves that state, either international or to another state. And so, as I always say, safe harbor was a rule that was put in place by the government, and they called it safe harbor because it was safe for them. Okay, it's set at 64.9, meaning that they assume that if you sell telecommunication services, you and your customer will experience 64 point, let me just say 65% of your commerce, of your communications are going to start in one state and leave the state and go somewhere else. And so that is often 65%, almost never hit by the average VoIP carrier, VoIP reseller. And so it's only safe for the government. They set it really high and they just say, if you can't figure it out, here's a safe harbor rule. And it just means that 65 cents out of every dollar you sell of communications products and services will be taxed by FUSF. And so with Ray, we implemented a traffic study, which means that we took his traffic experience for all of you folks, and we determined that traffic was somewhere, in the 20% range, 30% range. So we cut the tax rate essentially in half. Then what Ray did is that he put that same rule into the billing experience for all the white label platform providers. What that means is that you guys are more competitive than the average bear out there. So, in fact, traffic study safe harbor doesn't really come into play in the OIT network. It's phenomenal. I was talking about it today to industry leaders on how that was revolutionary with you, Ray, and how you implemented that. And I love
Thank
it
you.
because it makes everybody competitive. So I hope you guys understand. You may be asking about safe harbor, but it actually isn't even in play here.
Yeah, and
Yeah.
that's one of the things, one of the ways we leverage CLA. You'll often hear in business education peer groups, a good accountant, a good attorney, good vendors will actually make you money. Forget about saving you money; they'll make you money. The partnership with CLA has been exactly that. Between the stuff we've done with the mobile network, with the MVNO stuff, with the MVNI stuff, the traffic studies, the discovering new ways to enable our partners. It's actually created revenue models to not only save money on the back end, but also become more competitive for our partners to go out to the market and increase their revenue, which is a big deal. I think Dallin has come up with a very interesting model for safe harbor. If he opens his VoIP provider to church, is he safe from taxation? I know he says this tongue in cheek. Please don't take it seriously, but yeah, I thought that was pretty funny. Speaking of traffic studies, how often should they be done? Right? Is there a risk of audit if they're doing too frequently, too infrequently? What's the best practice here?
Yeah, so Matt had listed that, 1 year, that's what we recommend, and that's what we like to provide for our clients, meaning we go out and seek that information from them annually to ensure that they can provide that updated information to the FCC.
And I'll add to that, if any of you are out there merging with other telecom service providers, it's a good time to redo the traffic study, because their experience might actually bring your traffic study down. But regardless, you want it to be accurate. So if there's a major change inorganically to your business model, or you acquire some very large nationwide customer, you may want to quickly follow that up with a traffic study to see how it's impacted your calculation. But
And
once a year is a good rule of thumb.
Yeah, and that's exactly what we do. We do that as well. And those are some of the ancillary things that, if you're not an OIT partner, you should be, discussing internally, or discussing with whoever your carrier record is, whatever your partner is. But those are things that we do that, we're reviewing our tax mappings on a regular basis with CLA. We're reviewing our traffic studies on a regular basis with CLA. We're reviewing the tax footprints, what other options are out there for, whatever it is that impacts the partners, to enable them to do their jobs better with the least resistance. So you want to find partners that are going to do these things for you. And you don't have to be an OIT partner to leverage CLA. I know there's plenty of people here that are separate NetSapiens partners, or even BroadSoft and some other platform providers. You can leverage CLA regardless, and that's why I recommend them wholeheartedly. So a good traffic study is going to save a bit of money. I see this question is, when will I see the cost savings? Oh, I'm sorry. When will I see the cost savings? Did we answer that already?
No, we have not. And I was
Okay.
thinking that just is a perfect question, because Matt and I were talking about the complexities right before the call of when the revenues actually appear on a USAC invoice to the carrier. And we talked about how it's 2 quarters before you'll actually see that, because of the way that revenue is projected. And then later you actually get invoiced on those projections.
I remember when we first did ours, this is one of those questions that that I didn't know. When we did ours, we figure, okay, well, we'll do a traffic study, and we'll save money right away, right? Because the USAC stuff is quarterly, so we figured the next quarter we'd see it, and no, it didn't happen that way. So
And
it
we
was
got
one
the
of those that,
call.
like,
And we got the
you
call.
got the call, yeah. It's funny. I'm not joking when I say Matt and I talk at least once a week. Matt and my attorneys, we're talking at least once a week. That probably says something about our business, but it's always for a good thing. So which is nice.
It's all for
Um,
everybody on this in the audience, for sure.
Absolutely. So, I want to move on to next question. The big things are, right, traffic study, to determine the rates, and then also product mapping, tax mappings on your products, right? That can also have a major impact on what's being charged and how much you're charging your end user. So can you talk about tax mapping first, what it is, and then if we already give them, we do provide a generic list of tax mappings that are generalized for the products that we recommend sell, but does it make sense for them to do it for themselves if they have their own products?
So that's a great question. First off, everybody wants to sell what OIT offers, and you've done a great job of standardizing the tax rule base for how the taxes are collected on it, and it's optimized. Meaning, we took that product, if it's a bundle, it's a seat license with a dial plan, a DID, a toll-free number, and 3 pathways. All those components are taxed differently. So under the hood, we taxed each one to its optimal state. Now I've got a great example. We have a client who decided they were buying products from AT&T and then immediately added roadside assistance to their monthly plan. AAA roadside assistance,
Nice.
right? So they come to us and say, how do I account for the roadside assistance? And we actually broke that out on that bundled item, and it was taxed appropriately at non-communications. And in some states that roadside assistance wasn't taxable, I believe. So it's really fundamental that if you are going to create your own product using the billing infrastructure that OIT has provided, and it's going to be products you're bringing to this. So bring your own carrier or bring your own service, or for that individual that's out there, dropping big messages, with their TikTok, and they have their own NetSapiens switch. It's a perfect example where you have this fundamental ability to create almost anything. And it's important to work with a tax optimizer like CLA to understand how you're selling what you're selling, because sometimes you can cause more taxes to be charged against a product by combining them. So you also want to know when you're doing that you're doing it without some impact that you didn't anticipate. So I hope that was a good example.
No,
I
I
have
think
plenty more. So
that's excellent. And that kind of leads us into the next thing. There's often a lot of confusion, what the pieces are, because there's this little triangle, a pyramid that's needed, in my opinion, for compliance. Right? You have your billing system. We provide several, including OneBill and DataGate, depending on client needs. We also use RevIO internally. We have whatchamacallit, and then you have your compliance vendor, right? CLA in this case, and then you have that rating engine. We provide SureTax. There's a handful of SureTax, or there's a handful of rating engines, but we provide SureTax with our billing systems. And the question comes, there's a little confusion. People ask, well, if I already have SureTax, why do I need a compliance vendor? And they don't understand how they work hand in hand. So, Samantha, can you give us some insight on this one?
Yes. Thanks for asking that question, Ray, because that is a question that I used to get asked quite a bit. It's not as frequently now because there are so many different players in the market for rating. But in terms of rating, you can think of that as a team of people that they basically go in and research and say, these are the types of taxes that apply to the services and products. And this is how those taxes are going to be applied at what rates. And then that is how the products are rated. Compliance, on the other hand, is where we actually remit all of those thousands of taxes and fees to either the state DORs or the regulatory authorities in all of the states and at the federal level.
Awesome. And I appreciate that. And that's, all this stuff goes hand in hand, which is, there's so many moving parts. If you have one major takeaway, it's those moving parts. There are so many, which is why you want to, and how many was it, Matt? Again, how many agencies across the US regulatory?
We've surmised that it's well over 35,000. So I have a lawyer that we interact with. He says there's more than 60,000.
Wow, that's nuts.
But people shouldn't, I don't want to end with that, because the great thing is it's settled. The billing infrastructure and the tax rating engine does all the work. All you have to do is properly bill and put the right customer information in, and everything is taken care of. And that's what I love about your model.
Absolutely. And with that, we wanted to cover 10. I think we actually got to 12 or 13 questions. And this was out of 20 something questions we actually had to go over. But I want to be respectful of everybody's times. Matt, Samantha, thank you so much for joining us today. You are an invaluable resource when it comes to running our business. We would not be able to do it without you. And we gladly refer everybody over. Their information is here below. Whether you're an OIT partner, we always refer new partners over to them. Even if you're not an OIT partner, you can reach out to them directly for your own compliance needs. They are agnostic. You do not have to be an OIT partner, and they have a whole host of other services. So absolutely follow them on LinkedIn, and Matt's always doing events and stuff too. So follow them wherever you can. Thank you so much, guys. I appreciate you both coming on. Simon, what do we have?
Can I
What's
just
coming up next, man?
see us at Channel Partners if you're going to be there
Channel
in
partners.
Las
There you
Vegas, the 11th through the 14th. Thanks.
go. Absolutely.
Thank
Bye,
you.
guys.
Yeah, Ray. So we do have a couple of events coming up in the next few weeks. So today we just got wrapped up with the Partner First webinar, the top 10 compliance questions for new VoIP resellers. This is going to be available to watch right after this ends. And we'll also throw in the link to the DIY guide that you guys could download as well. Next week on Thursday, the Tech Bar Podcast, episode 34. We have Beard Bros and Brews with Matt Lee and Jason Slagle. That's at 6:30 p.m. Then April 7th at 1 p.m., we're partnering with Gozinta to bring you how to have difficult conversations before they become impossible. Right after, on April 12th at 1 p.m., we have an OITVOIP Everything MSP group webinar. You guys could join on the Everything MSP Facebook group. And then on April 14th at 6:30 p.m. ET, we're going to be back in the Tech Bar Podcast, episode 35, with Jimmy Hatzel of QuickPass. So make sure that you like, comment, subscribe, and you stay up to date with everything that we have going on in the channel.
Yeah, like, comment, subscribe, click it. I don't know, pound it. I don't know what you're supposed to do, but definitely follow us because we're always doing cool stuff. And reach out if there's some vendor or there's some topic of note you want us to cover. Absolutely reach out to us, and we'd be happy to do it. Is Simon allowed to attend on 331? Oh, for the beard. Simon has something in his pocket. I don't know if you notice he's growing the
It's getting there. This has been 2 years. Let's see if I could grow it fully by next Thursday. We'll see, Alan. You have to stay tuned.
There you go. And Dally gets it. Smash that like button, bros. All right. With that, thank you so much, OIT family. We appreciate you being part of this as always. Till next time, take care.
Bye, guys.